Welcome again, folks, to the Money Game with AC. If you're new to the channel, please consider giving me a thumbs up if you find this information valuable at the end. So now, I know that the times we are living here on since the beginning of this year, at least when it comes to the stock market, are definitely very interesting because we've been used for the last 2 years of anything going up and buying the dip always tend to work the next day or the next second day. All right, but now I've been buying the dip for the last 2 weeks and I'm still deep in the red. But I'm looking ahead, all right, at what the market might do, what the economy, is going, where the economy is doing, what companies are reporting as earnings. And I'm looking also at a chart, and I'm looking at what is the main reason why the market has been so much down since the beginning of this year. And I can share with you that I'm more optimistic, and that's why I want to share something with you when it comes to the coming recession, the recession we are actually about to get into. All right. And you can prepare by doing one simple thing, one single day at a time. Because I think I shared it with you on other videos a couple of weeks ago. I am trying to save as much money as possible because I want to be ready to take advantage of some of the discounts, the terrible, incredible, sales that we're going to have in the stock market and maybe potentially in the real estate market, at least when it comes to the digital real estate market, but also maybe depending on the amount of money that I will be able to save, taking some advantage on the, the real estate market, physical real estate market, because the digital real estate market is actually how you can buy what we call the REITs, real estate investment trust, or you can buy into some of the companies, the mutual funds or the ETFs that are focusing precisely and solely, exclusively into the real estate market. All right. So the best way to prepare for a recession is to be loaded in cash. That's why Warren Buffett said, last weekend on the annual meeting of the shareholders that it doesn't matter the performance of the company, they will always be heavy on cash, because when you are heavy on cash, that's how you can take advantage of any opportunity presented to you. And I believe as we get into the next year or so in the market and in the economy, we might have a deceleration of the economy. The economy will slow down, and this was expected, and it's not a bad thing. It's not a bad thing. And I think the reason why it's so much hyped, it's overhyped out there with fear, uncertainty, and doubt, is because the market always tends to overreact. And I believe it's going to be an overreaction, giving us to have some pretty significant sales in the market. If you are not ready, loaded with cash, you won't be able to profit. You'll not be able to position yourself to ride the wave all the way up. Because remember, the market always evolves and trade in cycles. Right now, we are on a downtrend cycle. And this downtrend cycle is pretty much driven by the fact that nobody knows exactly what the Federal Reserve is going to do when it comes to fighting inflation, when it comes to not breaking the stock market, not breaking the economy, but at the same time fighting inflation, which is kind of sticky. Now, I won't go into all the details on inflation and what they might do, etc., because we already done that a lot in other videos. But I'm gonna just say this: so far since the year started, on the S&P 500, the market is down 10.8%. If you look at the NASDAQ, things might be even worse. Let's look at the NASDAQ stock. No, not actually the NASDAQ stock. If you look at, just bear with me 1 second. Not the NASDAQ stock, but the NASDAQ index. NASDAQ index. All right, here it is. If you look at since the year started, it is down more than 20%. Now, everything here is based on two things. On the very, very, very bullish years we had since March 2020 all the way up to December 2021. So those 2 years, last 2 years were like, man, incredible. But remember, if you zoom in here, you will see that when stuff started to also break down here in March 2020, February/March 2020, that was COVID. It took only, 3 months? Was it 3 months? Yeah, May. It took 3 months, March, April, and May, for the stock market to completely recover everything. And from that point forward, things were like boom again. So anytime the market is down, at some point, it will be up again, even though it will be down again down the road. But the thing is, this is the whole cycle thing of the market. Now, I believe, and this is my only opinion, all right? I believe that because of the Federal Reserve, doing what they need to do to fight high prices, nobody knows exactly, because even them, they're not quite sure entirely, because it's a very tough spot. But at least we know that May and June, they're going to increase interest rates, right? But for the future part, we don't know. So they're kind of betting also on few things here. The first thing is the CPI data or inflation numbers are going to remain high. And, it comes to the report that we receive every single month. Some people think we are already at the peak, meaning inflation is going to be slowing down in the next months. Some people think inflation is going to remain high for the remainder of the year, and we might see inflation start to slow down or to peak by maybe December or November of this year. All right, so nobody knows exactly, and that's why the Federal Reserve is also not showing signs of kind of confirmation, and this is being reflected on the stock price of the market. Now, when and once we have a clarity, especially as June comes, because those two will be the two times where the Federal Reserve will increase rates by 50 basis points or 0.5%, the market will now know, okay, this is behind us. Let's now focus on what is going to happen next. So it's going to bring a side of relief, like, okay, now that's behind us, all of these stocks, especially on the NASDAQ, but also in the S&P 500 or the Russell 2000, are really, really, really at the very discount price. So people are going to flood the money in again, because, the real estate market with interest rate increasing, I believe is going to also correct itself. Maybe not a crash, but a correction or a stagflation, depending on the location also, because the real estate market, to my opinion, is not national. It's really localized to specific areas. All right, you cannot compare the Texas or Houston's real estate market with the California or real estate market. That's just what I believe. Now, based on that, I believe when the relief happens, we're going to have another rally coming into maybe starting in May, going all the way up to maybe summer. And then people are going to take profit again, because we're going to be flirting with the highs again, maybe the highs we've seen in 2021. But the bottom line is, you want to make sure you position yourself now and swing trade all the way into, the time when we're going to be hitting new highs. But for the recession coming, I believe it's going to actually, when we have confirmation on the GDP showing signs of a slowdown, then people are going to also start taking money off the table. And that is going to create another fear environment, as we are seeing now, because earnings are maybe going to be less than what we expect, causing people to think that, well, the growth is not there anymore, confirming again the recession. But if you start planning now, meaning every single month, consider having a cash amount that you want to put aside, maybe $5 a day, maybe $100 a month, maybe $500 a month. Because when that happens, it will be like, I'm just putting a number out there, buying a company like maybe, I don't know, Tesla at 500, or maybe buying a company like Apple at 100, maybe buying, a 300 company at 150. That is a 50% change, because the stock price of a company dropping doesn't mean that the company itself is valued less. And that's the trick with stocks. When you can identify that sweet spot, man, you can ride the wave down and up and make sure you cash in every single time there is a dip. And that's why I want us, as a community, at least that's what I'm doing, but I'm sharing what I'm doing to you guys, if you can also take advantage of that and profit on these swings. Because I do believe for the remainder of this year, we're going to have swings. At some point, boom, it's too low not to buy. People buy. Ride it up, and again, it's too high. Take the money off the table, and then boom, etc., etc. So let's see how it falls. But this is actually my plan on how to make money during recession.